You are watching First Edition. Great to be with you this morning. Let's get a check-in on the markets now. Joining us from CommSec is Tom Piotrowski. Tom, good to see you. What can we expect?
Danica, this morning we're going to see the market kick off in a positive territory by a decent margin, actually, up by about 1%, which is quite the contrast to what we saw yesterday when the market was down by about 1.5%. So that's a welcome turnaround. What we've seen in the Northern Hemisphere, actually for markets more broadly over the course of the last day, is another substantial move higher when it comes to long-term interest rates. And this has all happened at the hands of an interest rate decision, if you like to call it that, from the Bank of Japan. The decision was not to do anything specifically with official interest rates. There was a bit of a tweak in relation to how the Bank of Japan approaches the relationship between short and long-term interest rates. Essentially what they've let happen is the 10-year government bond in Japan move through a wider range. And that has seen global long-term interest rates shift higher quite substantially across most jurisdictions overnight. And that has been part of the reason for the volatility, not only where stock markets are concerned, but also where currency markets are concerned. So the upshot of all of that was that the S&P 500 traded through a range when it was up and down by about 0.5%. As we speak right now, it's just in positive territory. The Dow's up by about 0.4%, and the Nasdaq just in negative territory. So in the US, for the second night in a row, we've seen a double-digit move higher for long-term interest rates. So what we've tended to see globally is that bank stocks have been the beneficiaries of that. We've also seen commodities move higher because the US dollar's weakened a little bit, and that's been supportive as far as commodities, which could put our market in a better stead today.
Tom, thank you.